I'm Seth Basham, equity research analyst at WedBush Securities, and I can't wait to mic it up.
Welcome to Mic It Up with GoodBed.com's Jeff Cassidy.
So when that's the case, it becomes harder just psychologically to make a change.
And Mike Magnuson.
If you're doing those things, you can be competitive long term.
Just when you thought these number-crunching data lovers couldn't get any nerdier, they started a podcast.
And I know this is pretty controversial, but this is why we're having a podcast, right?
But if you want to be smart about how the mattress shopping journey is changing and what retailers and manufacturers should be doing about it, well then, man, have you ever found your people? Because right now, it's time to mic it up.
Well, dude, thanks so much for doing this. First of all, it's great to see you. What we'll do is we'll just sometimes I do the intro for the people, and then I always mess it up. So I'm not even going to try this time. I'm just going to hand it over to you and let you introduce yourself. You'll definitely do a better job of it than I will. So why don't you tell the audience, a little bit about who you are and what you do and your relationship to the mattress category.
I'm an equity research analyst at WedBush Securities covering the hardlines retail space. So that means that I study companies ranging from Home Depot to AutoZone to Wayfair to Chewy to Tempur Sealy and so on and so forth. Any retailer that's selling hard goods to consumers is in my purview. And with that study, I advise institutional investors, hedge fund managers, mutual fund managers on which stocks to buy and sell based on the prospects for those companies.
Awesome. And so the companies you cover in the mattress category specifically are which ones?
Tempur Sealy, Sleep Number, and Purple Innovation.
Okay. And then sort of tangentially related, like you've got Wayfair and you've got Bed Bath & Beyond.
Home Depot and Lowe's sell mattresses.
That's true. They do have some mattresses there. Yeah. Awesome. Well, it's great to have you here. We really appreciate you coming on the podcast. And we asked you on the show. This is our first episode in a long time. We're welcoming our viewers and listeners back after quite a long hiatus between season 2 and season 3. Many people started to question whether there was going to be a season 3. So for those doubters, we're back. But we're glad to have Seth here because obviously the world has changed quite a bit since we last recorded an episode of Mic It Up. And, we're looking at a really a different environment than we've seen in the mattress industry in quite a long time, like dozen years or more, like since really the housing downturn of 2008 and the ensuing recovery. So we thought, what better way to kind of get back into this new season than by bringing in Seth, who can give us really unparalleled visibility into what he's seeing in the market, both the mattress industry, but also retail more broadly. So we're super glad to have you here, and thank you for coming on.
You bet. Happy to be here.
One thing we like to do just to allow our listeners to get to know you, it's stupid, it's fun.
It's not stupid.
It's just a little thing.
It's fun.
Stupid in a fun way. We do a little lightning round. So bear with us. We're going to just go through basically just simple, short questions. They have nothing to do with your job or anything else we're going to talk about today. Just a fun little way for audience to get to know you. Okay. Are you ready? There's like 10 questions.
I'm really bad at lightning rounds.
All right. Fair enough. You're obviously in New York City, so we got to ask you, start with a really low-hanging, easy one for you. Favorite pizza toppings?
It's all about veggies. All veggies for me.
Wow, interesting. Okay, good for you. Great for you. Best music decade of the past 100 years?
1970s.
Oh, I love that choice. What is a non-condiment that you always have in your refrigerator?
Oh, boy. Jeez.
Veggies.
Day-old veggie pizza?
I don't have a good answer there.
Well, you do live in New York City, so you probably don't ever eat in your own kitchen. So, all right, favorite holiday?
Thanksgiving.
Yeah, that's a good one. That is definitely the most popular answer of my guests. Scale of 1 to 10, how good of a sleeper are you?
That's really a good question. So I'd give myself 6.
Oh,
not a great sleeper. Only a good sleeper.
Only a good sleeper, but not a great sleeper. Okay, interesting. Okay, so listeners out there, there's an opportunity right here for a customer. Greatest Harrison Ford character ever?
I gotta say Indiana Jones.
That's a good choice.
There's lots of good choices there, I think, too. Yeah.
There's so many good choices with Harrison Ford, though. Yeah, there's really no wrong answer, except for regarding Henry. Who should play you, speaking of actors, in the movie about your life?
Matthew McConaughey.
Nice. All right. Favorite snack food?
Pistachios.
All right. For some reason, that makes me think of Stephen Colbert. Is that because he was like a spokesman for the pistachio industry
He was?
briefly? I think so.
Makes me think of turtles.
I could be just a completely random name association. In what non-sport activity would you be most likely to win an Olympic medal? Non-sport.
Oh, boy.
Not sleeping.
Sleeping is not the answer.
Certainly not cooking, it sounds like.
Cooking is on and off. I can't help you there. I don't have a great answer off the top of my head.
Equity research, maybe? I don't know. All right, last question. What is something that recently made you smile?
Oof. Jeez. Seeing that stock pick work really well.
All right, there you go.
That's good.
Thanks for bearing with that. Let's start out, can you give us just a sense of what you see, what you're projecting for next year, like what you see in the forecast? Let's start, I guess, broadly for the economy and then work our way into like retail and then even eventually, I guess, into like the mattress category specifically.
Yeah, sure. So overall for retail, the setup's not looking great into 2023, with 2/3 of economists expecting a mild recession by early next year, as really inflation saps the spending power and higher interest rates work through the economy. So consensus forecasts are calling for negative GDP growth in real terms in the first half of 2023 and slight GDP growth for the full year. Not very good. The housing market, which is typically a major catalyst of economic growth, is poised for its worst year since the Great Recession. Fannie Mae, the National Association of Retailers, or Realtors, I should say, as well as the Mortgage Bankers Association, all expect a sharp slowdown in 2023, with recent forecasts calling for a 13% decline in existing home sales volumes, and some even looking at 20% plus declines for the full year.
Wow.
So many are also looking for home prices to decline, some low single digits, some looking for even double-digit declines in home prices. That does not set the world up really well for big-ticket consumer discretionary spending, and frankly, any discretionary consumer spending in 2023.
Particularly mattresses, though, which do correlate so much with new home starts and new home purchases and everything. Yeah.
So, right. I mean, with this backdrop in mind, we don't see many catalysts for retail growth, and we're expecting a down year. November's retail sales report from the Census Bureau was disappointing. Sales were down slightly month over month, despite a strong Black Friday period. So, I mean, the consumers held up better than a lot of people expect this year. A lot of that driven by a strong labor market and elevated personal savings, but we're starting to see layoffs pick up, especially in sectors of the economy like tech, and the personal savings rate has declined for 4 months in a row. So consumers are relying much more on credit to finance their purchases, and that's a troubling sign with credit card interest rates at 30-year highs and
potentially
more people
rising.
having to take discretionary income and put it towards paying interest on their credit card debt. So we're seeing a lot of pressure on lower income consumers, especially because more of their disposable income is spent on non-discretionary items such as food and energy. And that's obviously up a lot because of inflation, highest inflation that we've seen in decades. So the outlook for the higher end consumer is a little bit better. Obviously,
before you go to the higher end, I have a question just about the macro. So you said 23, you're projecting it to be a down year for retail, and was 22 also? Is that you're also projecting 22 to finish down over 21, or?
No, 2022 should finish up mid-single digits. In real terms, probably flat to down.
Okay.
But 2023, I think that we'll likely see a down year in real terms. In nominal terms, we will likely see flat to slightly positive growth.
Okay, got it. And that's for retail overall, or is that for mattresses? Okay, that's for retail overall. And how would mattresses, how would you adjust that if you were looking more specifically at the mattress portion of retail?
Yeah, so mattresses have been one of the worst performing categories that we track. We've
This
seen
year?
a very challenging demand environment. Yeah, recently, this year. The demand environment has been extremely challenging, especially for the last couple quarters. Unit sales down as much as 25% in 3Q, and not too different in the second quarter. That's getting a little bit better against easier comparisons here in the fourth quarter, and we expect the year to end down in unit terms somewhere in the mid-teens. Obviously, strong price increases make it look a little bit better, or a fair amount better on a sales dollar basis.
Yeah.
But in unit terms, it's down sharply. So as we think about the context of that type of decline, I mean, these unit declines are on par with peak to trough declines seen from 2005 2009 when we got smacked by the Great Recession. So what's really remarkable about it, though, is that they've occurred in just 1/5 of that time frame. Really, less than a year that we've seen such a huge decline in demand.
Not to mention that
and
we
as
haven't
you
even
called-
really gotten into a recession yet, technically. So
Yeah.
it's occurred in advance of that.
Right. So it's remarkable, especially when you consider, as you mentioned, that theoretically 70% of mattress purchases are for replacement. So that means that, if 30% are more discretionary in nature, we're seeing half of those discretionary sales disappear this year. But I think there are two silver linings from the recent trends. The first is that the demand environment does not appear to be worsening, as I mentioned. So that's good. And the second is that the precipitous drop that we've seen in unit sales in recent quarters has left unit sales growth about 5% below baseline trend, meaning we've already fully reversed the pull forward in demand in the pandemic, and that should provide like a cushion for growth in 2023. So when we think about our forecast for 2023, even with the mild consumer recession, we're forecasting industry unit sales to decline only in the mid-single digits. In dollar terms, it should be a little bit less than that.
Can you back that up and explain to me how you were able to conclude that we've seen all of the pull forward demand play itself out? Like, walk me through that assessment.
We look at what baseline trend is in industry unit sales growth, a little bit less than 2%. When you look at the long-term growth trend. If you take that baseline trend and you put it from 2019 to 2022, and you say that if we stayed with baseline, we'd be on that trend, and you compare what happened over that period where we saw unit sales shoot up dramatically in 2020 and early 2021, and then they've fallen so much further below baseline that we haven't gotten all the way back to what that trend line would be. So we're about five.
If you look at the area under the curve, essentially, like we've sold fewer total mattresses between 19, 20, 21, and 22 than we would have expected in baseline, even in spite of the fact that we had that big peak. Wow, that surprises me.
Yeah.
So the 22 downturn has been that sharp that we've more than corrected for that pull forward.
Exactly.
That's a great assessment there, and I'm sure that's great news to anyone listening to this podcast. Wow, that's really cool. So based on that, you're kind of looking at the 23 forecast for the industry, and you still consider it likely to be down on a unit basis, but that's more about cyclicality, just normal kind of, it's a down economy and all the other factors you mentioned, slower housing market and things of that nature, but it's no longer driven by that pull forward dynamic that was unique to the pandemic.
Yeah, so I think that's reversed out of the system. It's more about these cyclical pressures, and included in those are consumer income, discretionary spending power, confidence, jobs, and very importantly, the housing cycle.
Got it.
You talked about how in such a short period of time that decline happened, do you think that also indicates that the recovery might be able to be accelerated as well, or no?
So that's the interesting thing. When you go back and look at that peak to trough decline during the Great Recession, it took the industry 6 or 7 years to get back to baseline trend. So very different, circumstances, I'd say. And when we think about what's happening here, I do think that timeline can be compressed because of the sharpness of the decline here, but I think it might still take a couple of years' time.
Mm-hmm. What was it that you were going to say? And I apologize, I cut you off to ask you to rewind something, but what were you going to say about the higher end consumer?
The higher end consumer's outlook is better than the average consumer and the low end consumer. I mean, obviously, the higher end consumer spends much less of the disposable income on essential items. The stat that we like to use is that the top 20% income quintile spends 20% of disposable income on essentials versus 94% for the bottom 20%. So they look a lot better in a market downturn, economic downturn that we're seeing here. But there are some things to consider because the luxury housing market is actually doing worse than the housing market as a whole. So it's definitely pushing some of these consumers to the sidelines when they're considering big ticket discretionary purchases such as mattresses.
Mm-hmm. Do you see, given the disparity maybe between the high end consumer and the lower end consumer, do you see share shifts? Like, is that something that you're expecting and projecting across retail to, like, for example, from retailers and channels that may favor high-end consumers, and then seeing essentially share shifting towards those channels, perhaps, and towards those retailers, away from the ones that favor the low-end consumer, perhaps, or is that counterbalanced by the fact that everybody's essentially under pressure? Everyone in the consumer space, that is under pressure because of the downturn, and therefore lower-end products are kind of in general favored in that environment. Like, how does that weigh out? Like, those two things seem to kind of be in conflict.
Yeah, certainly retailers that are focused on selling to that low-end consumer, more discretionary products are facing the biggest pressures. So we've seen that from the likes of the dollar stores. Big Lots would be a lower-end consumer retailer with a lot of discretionary sales. Mm-hmm. We've obviously heard Walmart and Target call that out. But there are a number of mid to higher income consumers that are trading down. They're shopping at mass merchants they might otherwise not shop at. So there is a bit of a counterbalancing effect for sure. But it's really those really low end retailers that are facing the most pressures.
That's interesting.
And on those high-end customers, you talked about the main driver of it not looking as bad was that the percentage of their discretionary income is smaller for them than the rest of the population. Is that the only indicator that's suggesting that, or is there some sort of behavior that you have seen that also indicates that the forecast looks better for them?
In terms of what we've heard anecdotally from our companies, certainly seeing better trends for the mid and higher priced portions of the mattress sales, for example. But we've heard that across a number of other discretionary categories too. So there are some anecdotal data points there that I would say also support that view.
What are you seeing as you look across the retail space? Obviously, you cover how many total companies? 20 or so, or a good number of companies?
Yeah, 20, 25 companies. So I have a somewhat broad view of a number of hardline sectors.
And that's also why you only get 6 hours of sleep.
Yeah.
Or only a 6 rating on your sleep.
Maybe it's my recent memory about my relatively sleepless night last night that's leading me to conclude I'm only a 6.
So if we had asked you yesterday, we could have gotten a totally different score. So What are you seeing when you look across the many companies you cover, and even some that you probably don't officially cover, but you have to keep tabs on? What are you seeing companies in retail that's like distinguishing those that are faring better from those that are faring worse in this environment? Whether it's structural things about them, like some of the things you've already covered, or more strategic choices that they're making that are working well, maybe better than what choices others are making.
Yeah, so I mean, we're seeing a lot of companies remain disciplined in terms of promotional intensity to protect their brand power and their margins. Examples in our space are RH, or Restoration Hardware, and Williams-Sonoma. And we're seeing that to a degree as well in the mattress space with Tempur Sealy and Sleep Number. For Tempur-Pedic and the Sleep Number brands, they've been fairly consistent with their discounting relative to their historical offers. But the online mattress category, and really online retail in general, has been very promotional. And it's not clear that they've been able to meaningfully improve demand by doing this. So brand integrity really matters. What else are we seeing that's been working? Well, communicating strong price value certainly has helped some retailers. Wayfair is an example here, especially over the recent couple months. They've been able to improve their sales trends through better communication of that value message. For them, it's a little bit different because they operate a marketplace and there's a lot of excess furnishings and furniture inventory out there. So some vendors look to flush their inventory through Wayfair. So it's a good news story for them. But mattress retailers with scale, like Mattress Firm, are in a better position to replicate some of this model because the balance of power between suppliers and retailers isn't as one-sided in the mattress space as it is in home furnishings. What else? Well, I think focusing on getting and retaining the best types of customers by building an offering to drive more frequent interaction and loyalty is something that's resonating. We see that in the pet retail space. Yeah, in pet retail, we see that with Petco, really a holistic pet care model. They're not just selling pet food anymore. That would go right up against the likes of Walmart and Amazon, but they're offering a lot of services around that and a lot of loyalty programs to keep that customer coming back. So, they have grooming and training, and now they have veterinarian care. They're offering insurance as well. So that's a pretty powerful story, and we're seeing Chewy in the online form try to replicate that to a certain degree. Now, within mattresses, I think the closest example there is Sleep Number with their Sleep IQ platform. That's helped build some level of loyalty, but our understanding is that oftentimes people who buy a Sleep Number bed with Sleep IQ will use it for a few months and then give up the tracking. Perhaps I need some sleep tracking to understand why I didn't sleep very well.
Well, yeah, I mean, from my standpoint, the customer loyalty has always been kind of the holy grail of the mattress category because customer acquisition has always been like kind of the thing that separates the winners from the losers in the mattress category. Sure. And if you could retain customers once you've acquired them, that would really flip those economics. But it really, because of the fact that just the nature of the product, you keep it for so long, you don't generally see it. Like you don't even know. Like a lot of people forget what brand. It's not like a pair of shoes that you put on every day. You remember their Nikes or their Adidas. Like your mattress, you don't ever really see it. You don't think about. You don't get on your mattress and think, it's so great to get on my brand X mattress. Like you just think about bed. Getting into bed. So there's so many reasons why it's tough for brands, and even more so, I think retailers, if you particularly mattress specialty, to stay top of mind for that long and retain a customer. It's just a great challenge in our category. But
no doubt.
The tracking is kind of the latest thing that people are trying. Mattress Firm is also trying something along these lines. But Casper tried something called Van Winkle, a magazine. They thought, let's provide just magazine-oriented content about sleep. We're going to keep our readers engaged for 10 years. With that approach, that didn't last very long. So it's just a tough nut to crack for this category. I think remains to be seen how possible it is. But What are some things that you see retailers doing? You talked about one of them, obviously, like the perhaps overdoing it on the promotional activity and sacrificing some of your brand integrity in the process. Like, what are some other things that you see retailers doing, or that you know that from past experience that retailers might be inclined to do in this type of environment that you'd maybe caution against doing, or at least advised to be cautious about doing?
Yeah, so I mean, the marketing approach is a big question mark here because it's gotten really hard to, as you probably well know, target or effectively target consumers because of the Apple privacy changes. Mm-hmm. So we've seen a number of companies overspend on marketing without a great return on it. So developing a better marketing plan, I think, is critical, especially in this new world environment. What else shouldn't players do? Well, we've seen some mismanage their inventory. So inventory management in some sectors I follow, especially home furnishings, but also in used cars, is really led retailers to have a number of problems. So mattress retailing, you don't really hold too many weeks worth of inventory, but that inventory management is pretty important.
Traditionally you don't, but during the pandemics, there was, because of all the shortfalls, there was a lot of then stockpiles, and then that happened to coincide right almost exactly with the very beginning onset of the downturn, unfortunately, for many people.
Right. And that was a story about a year ago for sure. Oh my gosh. And then we've seen some other players just load up too much on debt or buy back too much stock. I mean, that's not necessarily something that to be aware of for a number of the smaller players in the mattress industry, but that certainly has created some problems for public as well as private players in the retail and consumer space and across the whole spectrum of the home furnishings vendor base too. Mm-hmm. So I'd cite those as some things that really shouldn't be doing.
You mentioned advertising, and cautioning or just the fact that many people's approach that they had been using with some amount of success in the past is no longer working with that same amount of success as a result of the privacy changes. That's something we've certainly heard across the board in this category. Like, you can't go on Facebook and as easily find mattress shoppers as you used to. Like, it's much harder to find them in places where they were just getting it from third parties, essentially. What do you see that is working? I mean, because obviously that's where we fit into this industry too. Like, you don't have to guess that someone's a mattress shopper when they're on GoodBed. Like, that's what we offer to retailers. But I'm just curious, so I guess that's a small plug for, if you're not already using GoodBed for your advertising, you should be. And that's certainly a way around all these privacy changes, because you go directly to the place where the mattress shoppers are, not like a proxy for them like Facebook. So, but what else are you seeing that people are doing that works on the advertising front?
Yeah, that's a good question. And this is not my area of expertise by any means, but I think first-party data is the holy grail here. So if you're able to have that customer come onto your platform for one reason or another and track them and be able to target them more effectively, that's great. Other ways to marry data sets to understand what consumer interests are and target them are also great. And perhaps, as you said, a partnership with a company like yours would be pretty effective in doing that. But at this point in time, even the more sophisticated retailers that I follow from an online advertising standpoint haven't fully figured it out. Take somebody like Wayfair. You can look at their customer acquisition costs, and they're up 3 times from 2019.
Wow.
Chewy's, they're up, nearly 100% as well. So there is a baseline trend of higher advertising costs, but there's this structural component, which is really problematic to making positive customer unit economics for online-based retailers.
Wow, those are some striking numbers. Up 3x, up 2x. Wow, that's amazing.
That's probably why their stock is down so much, right? They're the farthest down of everything that you cover, right? Related to mattresses.
Related to mattresses, yes.
Who's the worst that you cover, worse than them outside of mattresses? In the past year,
That
2
would be
years.
Carvana.
Carvana.
Carvana
Yeah.
is down like 98% or something, right? Like since their peak.
So,
Oh my gosh.
even worse than Bed Bath & Beyond. So Carvana's been giving me some sleepless nights lately.
Yeah, I bet. Bed Bath and Beyond too. You had some of that that whole kind of, what do they call it, like the Reddit fueled kind of investing, like I forget what the term is, but some of that
Meme
was
stocks. Yep.
meme stocks. That's right. They've been a meme stock on and off, right, for a little bit, right, this year.
Yep. A couple
That's
of
got to
years.
make your job a little harder.
That's a prime example of a company that mismanaged its capital structure. It sold a bunch of assets and took that cash and bought back a lot of stock just before its business started to roll over. So,
Oh, yikes. Speaking of some of those situations where companies are potentially in a precarious situation, I mean, I'm sure you saw the headlines recently about Serta Simmons and the possibility. Like, do you follow that company at all? Obviously, they have public debt. I don't think that's in your coverage universe, but maybe you have investors that are clients that ask you about it. Like, what's your point of view on an SSB, and also like how its challenges might roll over and affect the rest of the industry?
yeah, definitely. I've been following it tangentially. Serta Simmons has been struggling in recent years under a mountain of debt and operational challenges, and they've had a lot of share losses to competitors, including Tempur. So, Tempur reached a mattress industry-leading 30% market share in 2019, eclipsing Serta Simmons, and hasn't looked back since then. We think that Serta Simmons has lost a few more points in market share since then. And while we've been anticipating bankruptcy or debt restructuring for Serta Simmons for some time now, and so is the bond market too, given that their bonds trade at pennies on the dollar. The event's meaningful for Tempur Sealy in particular. The company is likely to restructure in bankruptcy, and in that scenario, they're likely to pull back on some of their less profitable or unprofitable lines of business, opening the door for Tempur to take additional share, particularly with its Sealy brand. So we look at that as a positive accelerator to Tempur Sealy's share gains, and a little bit less so for the likes of Sleep Number that we cover because of a little bit less direct overlap with Serta Simmons.
I agree with that. What about for the retail side? I mean, I guess you don't really have any pure retail in your coverage universe that are mattress oriented, really. But what do you think how do you think that would affect the retail side of this business?
Yeah, so it's a good question. I think that retailers want to make sure that they're getting good product with good marketing behind it. And consistent quality service. So to the extent that may not be the case as this company goes through restructuring, then they may very well want to give some of those slots that they had for Serta Simmons brands to another company. So that's one consideration. There could be some disruption with those relationships.
Do you think there's any scenario where the industry comes out stronger as a result of like having like a second player that can come out with presumably a cleaner balance sheet and a more financial stability on the other side of a restructuring? Do you think that could be kind of a silver lining in any way for the industry?
Not really. When you say come out cleaner, you expect there to be more financial stability and therefore less volatility. That could help a bit, but I don't see that as being a key driver for this industry going forward.
Yeah, I was just thinking. Yeah, basically, you summarized what I was asking. Like the idea of having like a smaller but stable number two in the industry. Could that somehow be a plus relative to perhaps where we've been for the last year, where, like you said, maybe they haven't had as much stability financially, and there's been these rumors of potential financial troubles on the horizon for a while. So, but you answered the question. Just turning our attention, you probably also follow Mattress Firm tangentially. I assume if they were to go public, they would immediately enter your coverage universe. And they did file that prospectus in January to announce the intention to do that. And since then, they've been kind of keeping the public market abreast of developments of their thinking on that. And the last I think I saw was a release in October stating that they continue to look at kind of strategic alternatives of various kinds. They're kind of watching the public markets to see if there's an opening. Like, what are your thoughts just on the next steps for Mattress Firm?
Yeah, so I think when the IPO market reopens and there's some stability in the economy and stability in sales in this sector, there could be interest from institutional investors to buy this company stock and IPO. But I don't see that happening in the near term. I think that the company will continue to pursue the next few months.
Okay.
So if it's going to happen, I think it would be probably a mid to late 2023 type time frame. So in the meantime, I think the company is going to continue to focus on improving its operations at the same time considering other strategic alternatives. So what else could they do? I mean, could they sell themselves to private equity? Could they sell themselves to another player in the industry? I mean, all those things are on the table.
Mm-hmm. Do you think, is there any precedent for, let's presume that 2022 is going to be a down year for Mattress Firm, as it will be for many players. Do you think, is there any precedent for companies to go public when the most recent full year of financial results shows a decline?
I mean, it has happened, not very often, but I think that they'll need to get a couple quarters under their belt of showing stability and a little bit of growth before there'll be real appetite, unless they want to take a huge haircut on valuation.
Right. Got it. You cover other physical brick and mortar retailers. I'm curious, like you cover Best Buy, for example, and Best Buy talks about, in terms of the size and scope of their brick and mortar retail network, they talk about it in terms of what portion of the U.S. population is within X minutes or X miles of a Best Buy store. I think the statistic that I seen from them was like a few years ago, 70% of the U.S. population is within a 15-minute drive of a Best Buy or something. And I noticed that in the Mattress Firm prospectus, they put a similar statistic in there about their retail network, saying 82% of people are within 10 miles of a Mattress Firm store. Now, Best Buy has about 1,100 stores. Mattress Firm has closer to 2,500 stores. I mean, I've been saying for a long time, I feel like 2,500, even though it's down significantly from where it was before they went bankrupt in the mid-2010s, it still feels like way too much, way too many stores to me. What's your point of view on that? Is there any reason in your mind why a Mattress Firm, a product that is purchased only once a decade, that people is highly considered, that people generally do want to touch and feel before they buy, and therefore presumably would drive a little further to do so in that rare moment that they're actually shopping for that product? Do you see any reason why a Mattress Firm should have more stores than a Best Buy?
So it's been a good question, and a question that's been around for a number of years. In fact, I think there was a podcast asking whether there is a conspiracy at Mattress Firm around money laundering or...
I was a guest on that podcast. That was an NPR piece that I was actually on.
As was I recall that.
It's still going around on TikTok, by the way, Mike. And the reason I know that is because my kids at dinner the other night just asked me if Mattress Firm is a money laundering front, and they learned that on TikTok.
That's
no
great.
Way.
Recently.
That's great.
That's amazing.
You gotta love Reddit and TikTok. Oh my gosh. But from my perspective,
I was like, kids, you got to listen to NPR. I debunked that 4 years ago.
You got to listen to the Mike It Up podcast.
And you got to listen to Mike It Up. Yeah, that's their real problem.
Yeah, they really want to do that.
Well, I mean, from my perspective, I think that they probably have more stores than they need, but there is some rationale to having a large number of stores, and that is to capture that customer's attention so they're top of mind when they do think they need to buy a mattress. So you'll see the Mattress Firm sign on the street, on your drive, on your walk, etc. You may not see that if there are fewer stores. So I think that's one of the most important things. The second thing to keep in mind is that it's not that expensive to operate a Mattress Firm store. So you have the storefront, maybe 1 or 2 employees in there. Most of your inventory in the store is heavily discounted, if not provided by the manufacturers. So overhead costs are relatively low compared to a lot of other retail stores.
Fair enough. At some point, though, do the economics, like given the changes in how people shop, I mean, like for sure 20 years ago, that whole being top of mind, the way people would shop, it was like the first thing, my first step when I'm deciding I need a new mattress is probably to stop into a store. Like, so being top of mind, being on someone's route to and from work or whatever was a big deal then. Whereas now I really feel like for most shoppers, our research and our data shows that most people's first step now is to go on the internet, not to go stop into a store. And in fact, stopping in a store is oftentimes the last step. After I've done a bunch of research, it's now like just this confirmatory kind of final step. So given that trend, like, doesn't that change those economics? As cheap as it may be to operate a retail store, like at some point it's still not worth it, right? Like, because what really matters is that you show up on the internet when people are starting this process, not that you're on their way to work. Because if you get into their consideration set while they're online, then they'll go a little out of their way to buy the product when that step comes.
Right. Now, I think that consideration, that sort of point where it becomes less economical or uneconomical, could happen over time. And that's why we've seen them close some stores, and they very well could close more as the leases come up. But there's a majority of the consumers in the U.S. who are still purchasing mattresses in retail stores. And they find value in what they can do. They can try the mattress out more than anything else, maybe get some insight from a retail sales associate. So I think that that's still the core piece of the industry, even though the online channel has grown a lot. I think the online channel's growth certainly went negative recently, and the growth in the future is likely to be slower than it's been in the past.
And just to be clear, I agree with everything that you just said about the importance of the brick and mortar channel. I was only talking about the sequence of when people go to the store, but I completely agree that is still a really important part of the process for people. I just think it's no longer the first step. I think it's now like the last step. And I think that changes the value of, the retail footprint, like how dense your retail footprint has to be. Because if they're narrowing their consideration set online and they're ultimately want to try it, they'll discover you online, and they'll be willing to kind of travel a little further at that time. But I completely agree. We're big supporters of the brick and mortar channel as a permanent part of this industry. We never really subscribed to this idea that like this industry was going to go completely online or anything of that nature. So completely agree with you on that.
Yeah, you just the equivalent of seeing it as you drive by on your route now is when I go online and the first time I start looking for a mattress, if I see you then, that's the digital equivalent these days of being top of mind.
Good. Well, one thing we always like to ask our guests before we wrap up is there anything that I didn't ask you that you feel like I should have? Like anything else that you think our listeners should know that, from what you're seeing out of there in the industry? Or
I mean, there are puts and takes as we think about the outlook for the industry in 2023 from a margin dynamic. There's a big question in many investors' minds whether or not commodity price declines will be a source of margin expansion for the manufacturers, whether they'll be able to keep the price increases that they've made or whether they'll have to reduce prices going forward. So I think that's an interesting dynamic when we look at it from a stock standpoint. I don't think it's as big a deal from a consumer demand standpoint.
Interesting.
Meaning, as you know, your consumers are making purchases in the mattress space once every 5 years or whatever it may be. So they're a little bit less knowledgeable about what the price is that they last paid.
That's right. They're not tracking those changes as closely as in other categories, so they're maybe not as sensitive to it. That does make sense. Good.
Will we see you at market?
I hope so. I plan on stopping by. It'll be great to catch up with you guys in person.
Absolutely. We'll look forward to. Let's grab a drink for sure.
Yeah, likewise. When you go to market, what's your plan of attack? Like when you go this upcoming market, what do you look for? Who do you meet with?
Yeah, I like to meet with people across the industry, retailers, as well as a number of brands. So that'll be my plan. See what's new out there and see what's changed.
All right, we're definitely going to get on your calendar for a drink or breakfast or something.
Sounds good.
Yeah,
definitely.
Always good to see you, and thank you for coming on the show. Thanks to all of our listeners. We're psyched to have you back here. Psyched to be back with Mike It Up. And as always, we remind you, if you like what you're hearing, please subscribe to the show on whatever format you prefer to consume it. Tell your friends. And feel free to leave us a comment with any of your thoughts. So we'd love to engage with folks on everything we're talking about here on the show. In the meantime, thanks for being on the show, Seth. And everybody, thanks for listening. We're out.